Okay, so I'm going to go through the practice exercises now that'll help you with the assignment number 1 for chapter 1. So in the first one here, it deals with the accounting equation. So we've got some missing information here. And remember, assets equal liabilities plus stockholders' equity, and that stockholders' equity is divided between common stock and retained earnings. So in the first one here, the question is, what are the assets? We don't have that number. So we know that this number is going to equal 30,000 plus 50 plus 62. So in that case, we've got 142,000 would cause this equation to be balanced. The next one, that's pretty easy. Next one's a little bit trickier. So on one side of the equal sign we have 50,000. The other side we don't know what the liabilities are, but we know the stockholders' equity is 10,000 plus 25. So if I have 35 on this side and I have 50 on this side, I can see that I need 15,000 to make that balance. So in that case, the liabilities must be $15,000. The next one here, I'm missing the common stock. So again, on one side I have 85,000, on the other side I've got 20 and 40, so a total of 60. So what I must be missing is that 25,000 to have this side equal 85 so that it is equal to the 85 on that side. So in that case, common stock is 25,000. The last one, it's retained earnings that's missing. So on this side of the equal sign I have 215. On this side I have 60,000 and 100, so I've got 160 on this side. So what do I need to make up 160 to get it up to 215? I need another $55,000 to make that equation balance. Again, every single case the equation has to balance. So that'll help you with exercise 1-5 in your homework. Next one, 1-8b, has us classifying events as an asset source, use, or exchange. So what type of transaction is it? So in the first one here, we acquired $20,000 cash from the issuance of common stock. So I would say that would be a source transaction because assets are going up. It's a source of assets. Cash is coming into the business. Assets go up and claims go up. Both sides of the equal sign. The next one, we borrowed 12,000 cash from First Bank. That's exactly the same. It's an asset source transaction. It's a source of assets coming into the company. Assets go up and claims go up. In the first case, it's a claim by the owners of the company. In the second case, it's a claim by a creditor. It's a liability. Next, we paid 5,000 cash to purchase land. That's an asset exchange transaction because I have one asset going up and another asset going down. So cash goes up, land goes up and cash goes down in that case. The next one, we received $25,000 cash for providing boarding services. That's a source transaction because assets go up and the claim of the owners goes up because providing services revenue pulls up our stockholders' equity, the owner's claim on the business. The next one, acquired an additional 5,000 cash from the issuance of common stock. That's just like transaction 1. That's a source transaction. Assets and claims both go up. Next one, we purchased additional land for 4,000. That's just like this exchange transaction. Number 3, an asset goes up, an asset goes down. Let's scoot this up a little bit. The next one here, we paid 10,000 cash for salary expense. So expenses are the opposite of revenues. So when we got cash for providing services, earning revenues, it caused our claims to go up. And when we recognize an expense, claims are going to go down. So in that case, it's a use transaction. Assets go down, cash is leaving the business, and the owner's claim on the business, stockholders' equity, is going down. Next one, we paid 10,000 cash. We signed a contract to provide additional services in the future. That's kind of a trick question. It's NA. It's not a transaction. The financial position of the company didn't change in any way. So the last couple here, we paid $1,200 cash for rent expense. That's a use transaction. Cash is leaving the business and our claims are going down because expenses pull down stockholders' equity. Next, we paid a $1,000 cash dividend to stockholders. That's also a use transaction. Assets go down, cash in this case, and claims go down. The owners have less of a claim on the business. And the last one here, determine the market value of the land to be $18,000 at the end of the accounting period. Again, that's another trick question. It's NA. It's not a financial transaction. Okay, so the last one we have here is 1-10B. And in this case, they just want you to indicate with an I or a D or an NA what the effect was. So in the first case, we acquired cash from the issuance of common stock. So cash increases and common stock increases. So they give you this one. Okay. Next one, we borrow cash. In that case, assets go up and liabilities go up, and common stock and retained earnings are not affected. Next one here, we collected cash from providing services. In that case, my retained earnings goes up as part of stockholders' equity. Revenue increases retained earnings, and my assets go up. Next one here, we purchase land with cash. In that case, I have one asset decreasing, and I have another asset, and I have another asset increasing, and everything else doesn't change. Next one, I paid operating expenses with cash. In that case, my assets go down and my retained earnings go down. They increase with revenues, they decrease with expenses. And then lastly, I paid a cash dividend to stockholders. Assets go down, retained earnings go down. So hopefully that helps you. If you have any questions, please don't hesitate to give me a call. Thank you.